Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials up 46, NASDAQ up 17, S&P's up 7.5. Gold contract down $19.60, trading at $11.50 an ounce. Silver off 19 cents at $15.51 an ounce. Platinum down $19 at $1,198 an ounce. Copper down a penny and a half at $3.02 a pound. Light sweet crude down $1.27, trading out at $77.39 a barrel. Bonds, we have the 10-year down 12 ticks, 126.09. 30-year off 22 at 140.31. King dollar up 189.6 at 87.91. You get the euro down 34 at 124, and the yen's trading up 31 at 114.90. Our phone number is 877-927-6648. Give us a call, folks. I know what's going on in your world. In the world of the S&Ps, what do you have? We are trading at 2037. The high is 2038. Bottom line, the S&P refuses to back off. Volume is light once again. If you go over to the SPY, we take a look at the SPY. SPY thus far today is down 46 million shares. Your swing point, that's pretty amazing. The swing point has 151 million shares at 201.68. It's taken over another swing that also had 246 million with 46 million. So it's zero volume up at these highs, folks. Dow Industrials. Let's take a look at the Dow. As the Dow had pulled away from the range it's in also. The range is like 151. Right now you're at 620. Lighter volume, yes. Higher price. Putting juice into the Dow Industrials today, you have United Health is up $1.24. You got Walmart up 103. Nike's up 121, and you get Big Blue up 181. Taken away from it, you get Visa down 230. Merck is off 54 cents. Chevron is down $1.06, and you got Intel off 20 cents. We go take a look at the NASDAQ. NASDAQ Composite. What do you have with the Composite? Composite right now is up $17, trading at 4649. Your high out there is 4654. We've hit the 5.3 level thus far. If we go and we take light volume, if we go take a look at the 3Qs, the NDX 100, NDX 100 right now is at 101.98, and you're up there with 16 million. And as one of our targets says, the beats does go on. The beats does go on, and bottom line, we'll see whether the NDX 100 can also push out of this level. The level we're talking about is 100.34. The gold contract, GCZ4, let's go to the gold. What you had with gold on Friday, gold had wide price spread, accelerated volume on the way up. On Friday, you're down $20 right now with 181,000 contracts traded. And we'll see, how it's going to basically test out this bottom. Friday, 1130 was the low, 1179 was the high. You had the juice behind the move. You're pulling back today with 181 million versus 181,000 contracts versus the 298,000. Of course, what you got to get into is that this low that was established on Friday will hold. Will it hold? I suspect it's going to hold. You could spike it. Why? The GLD went up on 10.9 million. You're pulling back today on 6.3. More important, though, what you have is that you have the XAU and the HUI. Both of those had got below the 2008 levels. That level is 63.52 in the XAU, and you're still pulling back into that level with lighter volume. The HUI, same deal. So in both cases, they rejected lower price. They had lighter volume. You're coming back down to the bottom of those to test those out. Right now, we're at 155.80, 74. That low that got tested last week was on the HUI was 150. And what you do have there is that you're going to have a rejection of lower price. You're going to have it on the daily, weekly, and it looks to me like you're going to have it on the monthly also. 877-927-6648. Let's go over to the bond market. We take a look at bonds. What do we have with bonds? 10-year bond trading out at 126.09. Bonds also start moving last week with volume. Got a little bit higher high today. Volume's light. So we'll see how it's going to basically handle the 125.07 area. Right now you're at 126.09. And I expect what you're going to see is that this is going to basically build cause to get up to the 127.16, which is the high volume high on the 15th. If you look at the Wall Street Journal today, you'll see it's on the front page. Bottom line is that the SEC is claiming that they're trying to figure out what happened on the 15th of October. And 15th of October, that's when the bonds, the 10 and the 30, went to the moon. Rates went down. We broke 2% in about a heartbeat, and then it basically came right back. Bottom line, folks, is that that's what trading's all about. They can scratch their heads as much as they want, but when folks are getting in and getting out that quick, that's a high volume spike, and it's going to go back up there. 30-year bond, 148. We're at 140.31 right now. That wants to get tested. The oil contract. So let's go over and take a look at oil. What we have with oil is this. Oil's trading out at 77.34. This little baby looks to me like we're talking 70 bucks. It's an ABC structure on the way down. It hadn't been able to even get back above the 79.44 level. Oh, I guess we did. We got 79.85 today and gave it up. XLE did the same thing. XLE is a monster ABC structure on their way down. Got to a higher high today, had lighter volume, not going to be able to handle that swing point up there at the 88.41. What that sets up, it's going to go after 80.77, and we'll see how it handles that level. The bottom of that day is the 77 level, and that's, you break that 77, if you have juice behind the move, that's an ABC structure on the way down. Dollar index, King Dollar. King Dollar just refuses to back off. What we had with the King Dollar out here today got down to a price point of 87.20. We've done 34,000 contracts thus far, and that's basically saying the dollar back down with lighter volume again, and those highs are going to get tested, and that's what's basically taking apart oil and taking apart gold. We go take a look at the commodities market out here. You get natural gas is down 3%. You get gold off 1.9, crude's off 1.6, silver's off 1.4. Lean hog's about the only thing that's up there. That's up 0.76. CMCSA, Comcast. Comcast is getting whacked out here. This is all about net neutrality. Comcast is down $2.62 with volume. It has a high volume low that's been hanging out here since the October 15th level. It's going to be interesting to see whether Comcast is going to be one of the first ones to reach down and grab into that level. The reason being, we're at 52.55. Once it gets back inside 53, that's saying, hey, it's going to go to the bottom of that range. That bottom of that range is 49.33, and we'll see how it attacks that 49.33. What this is all about on a fundamental basis is that President Obama called for the strongest possible rules to protect the open internet, advocating stricter controls than a regulator he appointed, causing shares of Comcast and other broadband providers to drop. I am asking for an explicit ban on paid prioritization, Obama said today in a statement, referring to the so-called fast lane for preferred web traffic. This is going to be a battle, folks, that is going to be out there in an incredible way. Our man Dave White has talked about it when we do the show on Fridays. He talks about it on his own show, and the bottom line is that if you go over and take a look at Charter Communications, that's down $8.20, trading at 148. That's also down with volume. And what's intriguing here is that when you look at Charter or Comcast, you can see that goes south on the 31st of July, goes south again October 15th. You're coming down to those levels, and it's like, how does the market know that this thing is going to be a big deal? And it is going to be a big deal, folks. We'll see where this whole deal does shake out. But the battle line is drawn, and we'll see whether they decide that the Internet is going to be regulated as a utility. And if it is a utility, we'll see what the structure, what the pricing structure is. This is Tom O'Brien. This is TFNN. You stay right there, folks, because at 3:30, come back from the broker at 3:30. We're going to have Mr. Dr. John Nigerian on. We're going to be talking options. We're going to be talking about an e-signal webinar that's absolutely free. You can sign up right in the front page website of TFNN.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. And we go take a look at Taiwan. That's also getting whacked out here today. It's down $8 at 135. And this also, what we have here is this, folks. You have the high volume swing points from the downdraft that was created on the 15th of October. On Taiwan's case, okay, the top of that is 133.90. The bottom of that is 131. We've hit 133.26. And, oh, actually, no. The top of that low is 137.09. The low is 128. You've hit the 133, and you've hit it with monster volume. So that's saying that, hey, the bottom of this 128.76 is going to get tested number one. That's the first part. We take this and you put this on a weekly basis, and what you're going to see at this particular point is that you have the high volume spike at 128.78, and how we come down to that and we break that basically opens up like a 113 here. So there's going to be not only some more volatility inside that market, but those high volume lows want to get tested. Now, let's go over to the euro. We take a look at the euro. What you have with the euro gets to a lower low intraday out here. We're testing the lows of Friday. That was 123.58. Right now, you're at 124.21. And, you know, we'll see that. And this is where this came off the bottom. The euro is going to need a lot more strength to even try to do a counter trend bounce, but I expect that that's what you're going to get. Why? Because if we go back to the dollar index and we take a look at the dollar, what the dollar has been trying to do for quite a while is go up and test the high swing point structure from 2010. That structure is 88.80. On today, we've hit 87.93. Okay, you know. When you get this close, more than likely it's still going to hit it. Now, what you do have happening, though, is that you're losing some of the juice as you get up to that level. It's really going to be important. Why? Because what you absolutely have is that the commodities, dollar index, where that's going, says it all. BABA, Alibaba, that's got some real juice underneath it out here. It's an ABC structure on the way up. It's up $4.30 right now. And this is all about, they call it Singles Day for some reason in China. And there's plenty of talk that, yeah, the Singles Day is going to be right across the country or the world. I suggest they do it on a different day because today, folks, is the Marine Corps birthday. That's all that's important today. And I want to wish all the Marines a happy birthday out there. Happy, healthy birthday. Market-wise, let's take a look at it. You get the Dow, well, inside the Dow. So the Dow Industrials in themselves, okay, bottom line, has got away from the consolidation it was in. The S&P has not got away from that consolidation yet. And, you know, we'll see whether, in fact, it can get away from it. Each and every day out here, it comes up slightly, kind of gives it up. But every day, if we look at the SPY, you know, going back to SPY, we're at 203.95. The SPY itself was trading at 201.41, and that was in September. You know, so 2 months later, we're kind of still at the same place. The Dow's a little bit different, meaning it got away from it. We'll see if, in fact, it can move further away from it. The volume is dying on the vine. I mean, the SPY should not be banging out 47 million shares with only 1/2 hour left in the close out here. That is about as anemic as you can get for the amount of buying that has taken place up at these higher levels. So we'll see where it wants to go. But we go over to the FTSE in London. We take a look at the FTSE. What you have, that great, that's right, one of the targets says no sellers. And that's a point. That's a point, no doubt. We go to the FTSE in London, 44. It was up 44 bucks today. That is still way under its low, way under its highs. The high out there is a price point of 68.82. Bottom line is that you're only at 66.41. The DAX in Germany, we take a look at the DAX in Germany. The DAX in Germany is at 93.51. That also just doesn't have any juice in it. And the surprising thing about the European markets, folks, is this, is that you have the European markets at about a 50% retracement of the whole move down, where our markets did get all the way back up. And that's unusual in the correlation that there's normally harmony inside of those. The oil and gas sector just can't handle it. What you have in the oil and gas sector out here today, you got Exxon down 21 cents, Chevron's off 98, you got Apache down $2, Rig is off 26 cents. What's intriguing inside that sector is that you had it test the highs of last week, couldn't handle it, daily, weekly, tested it again this morning, couldn't handle it. And what that had done is that it brought more buyers in, but guess what? They got basically coming from a positive to a negative very quickly. We go take a look at the financials with the XLF. Inside the XLF, in fact, let's look at BRK. I want to see, Berkshire came out with numbers, I believe. So Berkshire Hathaway up $1.38. This is the largest weighting inside the XLF too. Let's see. So $15 billion in dividends show. Well, maybe they didn't come out with numbers. 3.2. No, they didn't come out with numbers. Okay. But the bottom line is that inside that XLF, Berkshire Hathaway today get 2.4 million shares. That is pushed away from its high, but it looks to me like anything over 142.45 is going to be a problem. What is going to be intriguing is that the aspect of inside Buffett's portfolio, when you actually just take a look at some of the stocks that have got hit, they've got hit, and they got hit in a huge way. What we will have happening out here tomorrow, because it's Veterans Day, folks, is that the bond market will be closed. So we'll see where that whole thing does shake out on the day off. Banks are closed. I don't know why the stock market's not closed, but anyway, it's not. We go take a look at Apple. Apple out here. Apple right now is trading at 108.97. That has kind of gone sideways also. Away from the range, though. The bottom of that, well, the range was 103.72. It's definitely away from that range. There's no two ways about that. Now, XAU, HUI, gold is down big right now. HUI, XAU is giving it back just about everything that it gained on Friday. The real key is going to be, how do we give it back? Do you give it back with lighter volume, heavier volume? If we look at Gold Corp is back 93 cents, 8.6 million shares. That's versus going topside with 14 million. What that does show, though, is that this spike low of the 31st more than likely is going to get tested. That's the way that kind of is set up at this particular point. Let's go look at the IBB, the Biotech Index. Biotech Index right now is up $4.86, and that is going to go after its highs once again. I believe it's GILD that, that's not, no, that's only up 43 cents. Let's see what's inside this, CEPH. So we'll see what's putting some juice inside this. You stay right there, folks. It's Tom O'Brien. This is TFNN. We're coming up next with our man, Mr. John Nigerian, folks. We're going to be talking options. John's going to be doing an outstanding webinar on eSignal. You can go to eSignal.com. Right on the front page, you're going to see Back in Black. You can sign up right now. This is a special webinar that's going to be going for 4 hours on the 15th of November, Saturday. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow up 32 right now. Nasdaq's up 13. S&Ps are up 6.5. And right now we got our man, Mr. John Najarian, Dr. J. And, of course, I'm sure most of you folks know Dr. J. He's the co-founder of OptionMonster.com. He's always on CNBC. And coming, folks, if you go to eSignal.com, what you're going to see is that on November 15th from 9 to 1, this coming Saturday, they're having Back in Black, okay? It's a multi-speaker free webinar that you're going to basically learn about insight, indications, interaction, and where is your next trade coming from. Bottom line is that I expect it's going to be an outstanding webinar. Our man, Mr. Dr. J, is leading it off. John, what's going on?
Great to be back with you, Tommy. It's been too long, my friend.
It's a trip, isn't it?
Yes, it is.
And folks, okay, just to go for a blast from the past, I think it's probably around 20 years ago that you actually did a program on this network.
Yeah, and I used to come up and see you just outside of Boston occasionally.
I know, man. I'll tell you.
Way back in the day.
You got to love it. You got to love it. So this, well, first off, okay, it's great. I appreciate you coming on. Tell us, John, what you're going to teach this coming Saturday on Back to Black on the e-Signal platform.
Well, we're going to look at the rally that has been so fierce off of that 1820 handle in the S&P, Tom, where the S&P got down to 1820 on either the 15th or 16th of October.
Yes.
And how dramatic it bounced back and more or less set people up for what I think will be a good trading environment in 2015, and some of the same trades that we were talking about in the middle of October, we still like going into the end of the year. So we're going to try to lay out a game plan for a number of trades that people could take advantage of no matter who they're trading through, even if they don't trade options. But in particular, of course, if some of those folks trade options, a lot of what I'll be talking about will cover, the sorts of trades that they can take advantage of this gyration we've seen in volatility the last few weeks.
John, you have a great, resume in the option business and the trading business in general. Did you ever think, and I remember specifically, folks, okay, when you go back quite a few years ago, bottom line, options were new, believe it or not. Now, I mean, options seem to have overtaken the whole market, John. Yeah, well, and I think some of it is some people's fear, Tom, of things like high-frequency trading. They feel they're being gamed by the system, and I think you can still make money even in a high-frequency world, but obviously options aren't nearly as impacted by that because it's a derivative of that underlying stock. So the fact that somebody might be playing games, scalping a penny here and there in fractions of a second, that's not really hurting you or me as an options trader, and I think there is a lot of opportunities that get created by some of those disconnects when people start turning the machines off, which clearly happens almost on a daily basis, Tom. You see it more than I do in the futures markets where, you just see gold hit a wall and all of a sudden just drop, $30, $40, or just stop, the selling just dries up in crude oil or gold, and it just runs the opposite way, right. And there's nobody there to sell to them. I mean, those are the fun times to trade. And folks, what John's talking about, it's crucial to understand. It's when either the bids get pulled or the offers get pulled. And if you go look at the journal today, what you will find in that bond market on the 15th, that's exactly what happened. And that's important in the context, because if you are in the option market, well, guess what? It's not going to affect you because it's a short-term phenomena that happens when too many orders do come in at once. John, the penny-wide move, talk to me about the differences that you've seen in options in the last 10 to 20 years. Weekly's penny-wide move. I mean, because I remember you specifically were always preaching that, hey, listen, this is the way to do a defined trade. But it's pretty incredible that it actually not only come to fruition what you were talking about, it actually even, like, penny-wide. Who would ever think you could trade a $100 stock in a penny-wide deal right out the queues? Exactly. I honestly think, Tom, and you and I trade, I believe, the same way as far as neither one of us folks are guys that are down on the floor anymore. I'm trading from upstairs, off the floor, pointing and clicking the same way every single listener on this program is trading. Yes. And the same way, by the way, that a lot of hedge funds trade these days. A lot of those guys aren't picking up the phone and calling a trading desk either, unless they're Carl Icahn or, Ackman or somebody like that. Yes. For the most part, they're getting the orders in, and they're pointing and clicking and laying in bids and offers beneath the market or above the market and trading that way. It's the best time ever to be a trader. And, folks, if you come over to our website at TFNN, well, better yet, you can just go to esignal.com. So as you go to eSignal, folks, what you want to do is this. You hit the home page, then hit Education and Events. What you're going to see when that is up, you're going to see Back in Black, okay? There's going to be a special presentation coming this Saturday morning. It's going to go from 9 to 1 Eastern Standard Time. John is going to be the first speaker up. He's going to be talking about the post-election trading strategies. And as John was just saying, there's no doubt, number one, going down into October 15th, fast and furious, and then coming out of that just as fast. I'll tell you, I was looking, John, this morning, and this move, there's no doubt, you talk about fast and furious coming out of it. you don't see a lot of moves come back that quick after a downdraft. So it's going to be intriguing to see what happens the next 60 days coming into this close of the year. Yeah, it will. And I think, I don't want to stack too much on the election and say that that's the all clear. Stocks are just going higher. We'll see more of what we've seen, of course, and hopefully a little more of what we hoped for from the Congress and the President. But I think the issue is, Tom, that we're going to have lower for longer rates. That's going to keep equities very attractive. It may keep a floor, or it may keep some of that pressure on both gold and crude oil. We'll have to see. But certainly the strong dollar has been not a big friend of either the crude oil contract or the gold contract of late. No doubt. And I think we're going to see more and more trading that benefits from lower energy prices. That'd be manufacturers, that'll be chemical companies, that'll be the consumers spending at retailers. And that strong dollar, it's just a boon to the retailers because virtually everything they sell us, Tom, is made over in Pakistan, Poland, Vietnam, China, whatever. Strong dollar means that those retailers are selling stuff and making a larger profit on it because of the strong dollar. Yeah, and there's no doubt the gasoline itself. I think most folks are probably saving almost 30% from one fill up, and that's going to come into the economy, and that's fast and furious, right? Yep, that's one of the reasons you want to be, like I say, betting on the consumer in early 2015, if not already right now, is because I'm not saying that just because the consumer has another $10 or $7 per fill-up in their pocket that they have to spend every single bit of that. But we all know they'll either pay down a little debt, unlikely, or they'll spend it. And I believe most of that will get spent. And, again, that's 70% of the economy, Tom, so I don't want to bet against that. I want to ride that wave. No doubt. Listen, folks, you can sign up at eSignal.com. You just go to Products and Education and Events. It's back in black. And, of course, you want to find John, his brother Pete. Great site. It's optionmonster.com, and they just come out with a new book. And in fact, on the book aspect of it, folks, okay, I see you, I see you guys every morning right in my living room, John. I'm sure you say the same. You utter the same phrases that so many of my other friends do too, Tom. And ask me, when are we going to come up with a new commercial? No, listen, I think it's a beautiful thing, man. I don't mind you right in my living room. I like it, man. I like it. Well, thank you. Thank you. Listen, we're going to be doing another book and an electronic version as well. Okay. And I think those, to have folks that can pick up a few insights on how to use an option without blowing themselves up, that's something you and I would both always be in favor of. And I don't care if that book's written by Tom, folks, or if it's written by me or, any other option pundit. As long as it's accurate, I think it's a good thing for people to get that knowledge in their hands and be able to, trade futures and options the right way. There's no doubt. And that's, folks, all about strategies. It's not about putting on red or putting it on black. And, John is very good at that because understanding strategies, folks, okay, and he's one of the first guys that taught me this. Well, bottom line, you can be wrong in the market, and guess what? You might not lose money. You might break even. You might lose a little less, okay? And now it's got even better because of the fact that you're talking penny wide right across large markets. Let's put it that way. Listen, John, thank you so much, man. We really appreciate you growling and prowling with us. And, of course, we look forward to the webinar this coming Saturday. I look forward to it, too. Thank you very much, Tommy. We got to have a drink sometime soon. We're going to do it, brother. Okay, Thank you, sir. Have a great one. Have a safe one. So you go to eSignal.com. You're going to go to Education, Events. You're going to see Back in Black. You can sign up right now, folks. It's absolutely free. You stay right there. We're coming right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now are up 31. Nasdaq up 15. S&Ps are up 7.5. Gold, we're down 21 bucks, 1148, and the low that was established last Friday, folks, was 1130. Bottom line, you're going into that level, and it's going to get tested. Intraday, it's coming into the spike with dramatically lighter volume. The bottom of this range, right where we are right now, is 1144. Thus far, you get to 1147. Dollar, well, inside that core, let's go to the silver market. We go take a look at silver. What we have with silver is down 20 cents, 45,000 contracts. This is also coming into the spike lows out here. Silver's coming back with dramatically lighter volume, too. So this is going to be intriguing to see how it goes after the low, which is the low in silver thus far is $15.04. That had 74,000 contracts down there. We're coming down into that level with 45,000 contracts. So we'll see, number one, does it get to it? Number two, what type of test it has at those lower levels. Thus far, the equities that are coming back, they're coming back with lighter volume, but they are absolutely hitting them on price. If we go to Gold Resources, GOLD, what you'll see, you're back 375, but guess what? It's 1 million shares. And, you know, when we were going topside, it's 2.2 million. So that is a decent pullback with lighter volume. Franco-Nevada, which is these equities here, absolutely contingent on what the price of the metal is, because that's the only way they have it's a royalty company. Franco-Nevada is down 286. We're doing that with 996,000. We went up on 1.5 million, and this can test the 4683 area. Thus far, we're at 4772. Royal Gold, RGLD, another royalty company out here, that is coming back $3.63 or 5%. And how we get into we're kind of right at it, 61.52. And what that is it's not the bottom of the spike low. What it is that how it came off that spike low. So Rheingold had gone down to $55.55, rejected lower price, had juice down there on the daily, not on the weekly, had juice down there on the daily. So, you know, we'll see if, in fact, that's going to go down and retest it. And I expect, more than likely, the way that this contract is reading right now, it looks like it's going to. The dollar index, no doubt, folks, the dollar, the euro, the yen, the dollar is ruling the whole ball of wax right now. This market, you know, went from hating a strong dollar years ago to loving a strong dollar now. Each and every turn in the marketplace, you know, I'm talking about click for click, tick for tick, has to do with the dollar going down versus it going up. If you even look at intraday out here today, 0600 this morning, dollar's down, starts making its way all the way back. As that starts making its way back, what you did have is that the S&P itself, the Dow, got a little traction. What is going to be intriguing is that watching the oil and gas sector, because that oil and gas sector looks like a very large ABC structure on the way down. It's going after the swing point now. Okay, one of the first ones to turn. In fact, let's go look at the small caps for a second. Okay, so the Russell 2000, if we look, the IWM is still hanging up here. So the Russell 2000 right now, let's see, let's put the actual Russell up instead of the IWM. And the Russell 2000 right now, we're at 1176. This still hasn't been able to get to its high. You know, the high, I mean, it's hanging right at it. The high is 1212. We've hit 1178 thus far today. The swing point is trying to hit out here is 1183. Still doesn't have the juice. 2 weeks ago, we did have some good juice in it. That was to the 1174 area. So the small caps have more work to do. We'll see if, in fact, the small caps can reach the highs. It doesn't look like the small cap's going to reach the highs. Dow is away from the highs. The S&P is the whole ball of wax right here. And when you do look at the oil and gas sector, that very well could be the beginning of that S&P pulling back once again. The information sector is the largest weighting inside the S&Ps. So that sector there, we'll see if, in fact, you get some downdraft happening. The IBB is what always is affecting the NASDAQ composite. The composite right now is up, the IBB is up 470. That looks like it's going to retest the highs that were generated just last week of the 31st. So don't forget, folks, if you'd like to go to a great workshop this coming Saturday morning, it's free. Go to esignal.com. And when you go to eSignal, what you're going to do is you're going to hit Education and Events. What you'll see is Back in Black. It's a multi-speaker free webinar. It's going to be going from 9 o'clock in the morning to 1 in the afternoon. Our man, Mr. Dr. J, is going to be kicking it off at 9 o'clock in the morning. Then you're going to have Darryl Guppy. He's going to be up after that. Howard Lidson is next. Ron Wheeler, Jan Obbs, and Dan Zanger. They're all going to be there on that Saturday morning. So you can check that out. After the close out here today, of course, we get more numbers that are coming up. Bonds out here continue to basically reject lower price. On Friday, we had higher bond prices, lower yields. Today, you're pulling back, and you're pulling back with lighter volume. And it doesn't look to me like the bond market is over yet. The 10-year is yielding 2.355 as this stands out here. And what that's all about is what? Is demand for bonds versus supply of bonds. That's what it really comes down to, folks. And in fact, if you look at that article in the Journal today, it's pretty neat. They have a bunch of the amount of bonds that are available very quickly to buy are not in huge supply, folks. That's and when that happens, of course, is that, guess what? Between foundations, between states, between sovereign countries, there's plenty of folks that want to be in the bond market. And why? Because they just want to make sure they get the money back. That's what it really comes down to. Versus how much you're going to make on your money. They're looking, and inside the prospectus, inside their declaration of whether it's a profit or a non-profit, many of those declarations say flat out that you have to own a certain percentage of bonds. So that percentage of bonds is always going to be, there as demand inside the market. When you take a look at the aspect as to where our rates are versus Europe, it's still a situation that, guess what? United Kingdom's only paying 2.2. France is 1.1. Germany's 0.8. They're going to put money into U.S. bonds, folks. 877-927-6648. Dow Industrials right now up 32. Nasdaq's up 16. S&Ps are up 7.5. You stay right there, folks. We're going to be coming right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So I've had a great day, safe day. Let's make it a great night, folks. And I want to make it a happy birthday to the U.S. Marine Corps. It's a beautiful thing. To all you Marines out there, happy birthday. Make it a great one. Make it a safe one. This quote here is from Robert Blatt. Remember that there is part of life for which you are the explanation. Market-wise, let's take a look at it out here. We had the Dow Industrials up 39, Nasdaq up 19, S&P's up 850. Gold contract down $18.50, traded at $1,151 an ounce. Silver off 12 cents at $15.58 an ounce. Platinum off 20 bucks at $1,197 an ounce. Copper down 2 pennies at $3.01 a pound. Light sweet crude off $1.38. $77.25 a barrel. Bonds, you get the 10-year down 11 ticks at 126.09. 30 is off 22 at 140.31. King dollar up 184 ticks at 87.91. The euro's down 34 at 124.20. And the yen is trading up there at 114.84. Our phone number is 877-927-6648. Give us a call, folks. I know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You closed at the highs. You're at 2037. That means you can go higher. Volume was 700 million. There's no juice on the upside. Bottom line, Got the price crawling up, however. Dow Industrials up 31 bucks, and the Dow, as I've been saying, the Dow is away from the range of that 151. You know, you had the spike of 350 up there. No juice also inside the Dow Industrials. What was giving it points today is you had Nike was up $1.18, United Health was up 114, Pfizer was up 28, and Big Blue was up 142. Taken away from it was Intel, down 32. Merck was off 53. Visa was down 222, but that's after Visa is a moonshot, folks, that has just gone from 190 to 250. 195 to 250 in all of 3 weeks. Bottom line, some big numbers coming out of there. Gold. We go to the gold contract. We take a look at gold. What we have with gold is this. Gold, 1151.20. We did 189,000 contracts. You had the wide price spread, decent volume on Friday. That's when we went from 1120 to 1179. I expect what you're going to see out here in a couple of these equities tomorrow. This is going to try to get after this low that was generated from Friday and from the prior Wednesday. Those levels want to get tested. Why? If we go over to King Dollar, what you have with King Dollar, this has been trying to hit this price point for quite a while. It got up to it. It's about another 500 ticks away from where it wants to hit. What you had out here today, you pulled back, rejected lower price, did it on lighter volume, and that's saying that guess what? Good old King Dollar is going to make another run for this 88.27. What I expect you're probably going to see out here is that 88.90 and the continuous contract get hit. Don't forget, folks, at TFNN, we do 10 hours of live programming every trading day. We go from 8 o'clock in the morning to 6 o'clock in the evening. You can get all that programming right on your cell phone at TFNN.mobi. That's if you want the full audio stream. If you want the TV stream with the audio, just go to TFNN.com. On the right-hand side, you can hit the TV. You're going to get the audio plus the video. Our man, Mr. Steve Rhodes, does an outstanding show right here, 9 to 11 Eastern Standard Time every trading day. Now, Steve is also going to be doing a 7-week trading program, folks. We're launching this today. You got to check this out, okay? The program is going to start on Saturday, November 22nd. It's going to go until January 9th. It's going to be 2 separate webinars with updates each and every week. We're going to let our man, Mr. Steve Rhodes, tell you exactly what you're going to be learning in this webinar. Steve Rhodes, what's going on?
Well, Tom, first, happy birthday to you on a couple of different occasions, and thanks for the service that you not just give to us each and every day, but what you've done for the country.
That's beautiful. I appreciate it. Thank you so much, man.
No, absolutely. And it's great, and just keeping up with all the uniqueness, all the great things, all the great tools that you provide to all of the TFNN family. We're going to provide them with another great unique program, a 7-week personalized coaching, mentoring, trading program. And as you said, we're going to kick this thing off with a 3-hour workshop on a Saturday. So that's important because normally we do our workshops during the week. So we're going to do a 3-hour workshop on a Saturday.
Yes.
And the course is really designed for the 3 primary skill levels. So for all those folks that are listening, if they are just a beginner, then this is the type of course. This is where they want to start. Because, in as much as books are a wonderful resource, what I do is I cut right to the chase. So it's really it's a step-by-step process where I identify the exact items that one needs to focus on to master the trading patterns in the market. It's like being in the kitchen with, Wolfgang Puck or some great chef out there where he's going to share with you his best recipes, instead of having to
it's really cool, too, Steve, as you just said. What happens, folks, is that we've done these Saturday morning workshops before, and it's really neat because a couple different things that end up happening. More people can make it. We make sure that you're out of there by noontime so that no matter what, whether you're at a soccer game, football game, and all the above, that you can make it. But what particularly ends up happening is that's when Steve's going to be going through not only the patents, what the rules of the patents are, all of the above, and then he's going to be following this up on a weekly basis. And this is what's really cool, though. So then tell us about the second webinar, too, because both of these webinars, folks, are included in the one price of $395.
Yeah, the only way that I can really coach or mentor someone is to provide the rules and then follow up with specific. We're gonna follow 2 or 3 very specific instruments with the exact time frame, so that each week I'm able to update folks on the exact patterns that are taught, the trades that one should have taken, the entire money management piece of it, so that they can master those programs. Then we come back on January 9th after the holidays, and during the live trading session on Friday, then we're going to start taking a look at those patterns and those time frames, other time frames, Q&A. The whole idea is to be able to continue to answer any question that somebody has about those patterns, other things that we're taking a look at. We've gone ahead, we've separated this from the standpoint that the cost of the course, a little over $1 a day, it's $395. And if you are a Mastering Probability subscriber, you get $100 off. So it's $295. So we've broken it apart that way. It's also really, so if you're a beginner, this is the place to start. If you are kind of at the intermediate level, the level where you get stressed out because you've learned a lot, but you feel like you're at a roadblock, then this is a course that folks will want to take because, much like planting a garden, we've got to lay down more seeds because all the seeds don't germinate. And the reason is that what I've found is that most of those seeds, when they're trying to break through the crust of the earth out there, they just give up. And so I don't want anybody to give up. So if they're kind of at this intermediate level and they're frustrated, well, frustration just means they're just about to learn something. And this is the place for folks to be able to learn something through this workshop. And then if you're a proficient, skilled master, this course is also there because it's always about feeding our mind. It's about continuing education out there because we know that when we feed our mind with ideas, masters never stop. You never stop. I never. You're always reading. Right? You're always reading, trying to pull out the best ideas to be able to provide that to all of our listeners out there. And I want to do the same thing. I'm going to do the same thing for this entire 7-week process, that begins on November 22nd. So like we said, week 1, it's a Saturday morning course. It's for 3 hours. It'll be archived on people's members page so they can replay that. Then each week, every Monday morning after that, they're going to get 6 weeks of follow-up. They're going to learn about what I call the ultimate toolbox, the lightning bolt pattern, that A to B equals CD pattern, the key divergence patterns that create opportunities, how to actually trade those, the Gartley butterfly patterns. Most importantly, though, the market is always communicating to us. So there's 14 candlestick patterns that are a must. If you go out there and you get a book and you take a look at all these different candlestick patterns out there, it will just confuse you. And so what I'll do is I'll cut through all the confusion, just to teach people what it is that they've got to focus on. And then that week 2 through 6 out there, I'll be taking something like the ES and the NQ, probably on a 30-minute basis, so that folks can understand those patterns that are out there. I'll take a currency pair, I'll take a stock and an ETF, and we'll just simply follow those along for this 7-week process out there.
And folks, the way you get it, come over to our website at TFNN, and you're going to see it right at the very top of the carousel. It says 7-week trading program with our man, Mr. Steve Rhodes. You can sign up right here, right now. It's only $395. And as Steve just said, you're going to get 2 webinars. You're going to get a follow-up every week. You're going to get an outstanding education in an extraordinary way. Steve Rhodes, thank you so much, brother. You have a great night, safe night. And, of course, we look forward to not only the program every trading day from 9 to 11, but we look forward to your 7-week trading program, man.
Sounds great. Have a good one.
Okay, have a great one. Have a safe one. You stay right there, folks. We'll come right back. 877-927-6648. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finished up 39, Nasdaq up 19, S&P's up 8. And as we do each and every Monday at 20 past the second hour, we have our Tigress Amy Smith from Investor Business Daily. And folks, if you haven't test drove either the digital edition at investors.com or the print edition, Investor Business Daily, you can do that right now, 2 weeks absolutely free. The way you do it, just hit the banner. You'll see it on the right-hand side of TFNN. Hit that banner. You can take the choice, either go with the digital edition or the print edition. Amy Smith, what's going on?
Hey, Mr. Tom. Good. Everything's great.
That's a beautiful thing. I like that.
It is. It's a good day. What day's not a good day?
That's a fact. Seriously, man. Hey, so I see that you just finished a leadership workshop right in L.A., and you had quite a few people there.
Well, we had a ton of people there, and guess what? You know, you're always asking me about, like, investing sentiment. What are people thinking?
Yeah.
People are pretty, I tell you what, people are pretty excited, and you know what? Every single person is in Alibaba.
Now, that's interesting. You know, I mean, it's an ABC up, and it's a little extended right now, but there's no doubt when you, folks, if you want to hear something wild, I mean, just in 5 trading days, Alibaba's going from 99 to 119, so that's 20%, but it's actually gone up 50% since it hit 82 on the 15th of October, so it's pretty intense.
It's crazy. Now, I understand, I think, a lot of analysts say, like, they're taking money out of Google or out of some of these other stocks that they've owned and putting it into Alibaba. It's a huge institutional stock. You know, it trades, you know, millions and millions of shares, 33 million,
sure,
you know, a day, an average daily volume. So today, now, they reported what I thought was crazy. They have Singles Day, and it was originally to celebrate individuals not in a relationship, but what it's actually turned into is like a big shopping day.
I know.
It's a big e-commerce day, and so I'm sure you saw this, but in case some of your listeners haven't heard it, they sold $2 billion worth of merchandise in the first 18 minutes.
Amazing.
Of this. That's just crazy.
It is. There's crazy numbers. I agree. I mean, I know. I mean, it's just amazing. And, you know, the speculation is that this will turn into a worldwide phenomenon, and I think it will. I mean, I can just picture because, you know, the whole Thanksgiving deal, Black Friday is really done. I mean, you know, because the reality is that, you know, on the Internet, you don't have to get up and go to the store anymore. And people still will, but as to the day after Thanksgiving, I just don't see that as the number anymore.
I agree with you. Well, this is the world's largest 24-hour online sale, and this year they did exactly what you just said. The festival is global, and it reached shoppers in more than 200 countries.
Did you shop yet?
I haven't, but I feel like now I'm behind. I need to go catch up. All these people have done their shopping already.
Are you going to shop any?
Yeah, sure, absolutely.
Today?
Oh, today. Well, I get so busy at work. I don't know.
I'm with you. No, the reason I'm asking, so listen to this, because I feel the same way they're talking about, Amy, and I can imagine people going across the country. I'm on the way to work this morning, right, and I'm hearing this statistic, and I'm saying to myself, yeah, I got to get out there and do some shopping, too. Isn't that crazy, though?
It does. It makes you feel like you're definitely behind.
Folks, I got to tell you, you know, of course, we all talk to ourselves, and I was laughing another way where I says, I can't believe that I'm going to say I got to go out and shop. But
yeah, you got to go. Well, you know,
and we'll find out if I do or not. But that thought process is a wild thought process, man.
Well, it is, and you know, this Jack Ma, he's got $23 billion. You and I've talked about it before, but now we're starting to see it right in front of our eyes. And he hasn't even bought any other companies yet. He hasn't spent that money yet.
No, I know.
And well, you know what? Here's the other thing. I have, you know, on our charting stuff,
yes.
I can see all the fund ownership.
Sure.
We went from 5 to 530 funds, and I think in the last week we jumped from like 71 up to over 500 in 1 week. So the number of funds that are piling into this thing is crazy.
Yeah.
It's just crazy, crazy, crazy.
No, and it makes sense, too, because the reality is that when a few of the larger funds own it, folks, they almost have to own it, even though it's not in the S&P just yet, but they have to own it, you know.
They do because, you know, I mean, they've got end-of-year window dressing and everybody else is buying it. And, you know, if you're in a fund and you go to the fund manager, you say, well, why didn't you buy Alibaba? Everybody else is in it.
Yeah, no doubt. So when we talk about the IBD take on the current market, what are we looking at?
We're okay. We're kind of in this sideways mode. The breakouts have slowed down. Earnings season, we've got all these things. Earnings season's winding down, which often sort of drives the market. The Fed isn't going to meet again until December. We got the midterm elections over with. So whatever would have driven the market crazy higher, we came up 12% off the bottom after a 10% correction. People think that it's going to be a more pro-business environment since the Republicans took over, but if they do things, it's going to take a while for those actions to take place. So it would not be surprising if we had a little breather here.
You know, it's going to be pretty wild watching this thing shake out. When, you know, the mantra, of course, is that it's going to be a pro-business environment. What I always question is that the S&P just went from 666 up to 2,038. There must have been a pro-business environment we're in, right?
Right.
I'm not kidding. I mean, there's some things out there like, oh, well, how did that do that?
Right, exactly.
But I understand what you're saying, believe me.
No, I agree with you. The market's going to do what it's going to do. Fortunately, no matter who we have in the White House, you know, the market marches to its own
Thank
drum.
God.
And, you know, what I thought was interesting is, you know, that both groups mess it up. So whoever has control of the Senate, it says, I think this was since 1980, if I have my timing right.
Okay.
Whoever has control of the Senate, they get it for 8 years, and then it flips to someone, you know, either Democrat or Republican. It flips back and forth. So no one can control it more than 8 years without messing something up that goes the other way.
That's pretty wild, no doubt.
Yeah.
And when we take a look at some of the IBD 50, what are we looking at here?
Well, it's funny. People shouldn't be terrified. We had a couple of really sharp moves. Usually healthcare has been so strong. I mean, it has just rocketed higher. But we had some disappointing, a couple things. Salix Pharmaceuticals from the IBD 50 dropped 34%, that's a big drop. They missed third quarter expectations. Their chief financial officer actually resigned. So they're having to do, they're looking at their inventory, thinking that things weren't reported properly. And another one, Lana skidded 12% last week. But overall, generally speaking, because we have this aging population, the healthcare group looks strong, but last week was a bad week.
Yeah, look at that. Wow, that was, okay, so that was, I'm sure they're going to have an issue somewhere in their financials, I guess, right?
Yeah, there was something that definitely rose, the questions were arising, and so people sold it off.
Now, where are you going next, Amy?
So I'm in town this weekend, and then I am at the Traders Expo in Vegas. I am at Caesar's Palace. Let's see, what is it, the 22nd, I guess I am.
Yeah, so folks, if you happen to be in Vegas for the 22nd, you can go see Amy. And if you go to, I believe it's moneyshow.com, and just you'll hit the Traders Expo, you'll be able to see when she is speaking.
And I'm speaking right after kind of an interesting guy. I'm the actual, there's a keynote end, which is the Bollinger Band guy.
John? Okay.
Yeah, John. And I'm speaking right after him. So I'm the very last thing in the show. Whether that's good or bad, I don't know. But I'm the very end.
That would be a beautiful thing, no doubt. Amy Smith, you have a great week, safe week, and of course we always look forward to speaking to you right back here next week.
You too. Oh, have a good one, Tom.
Thanks so much. Have a great one. Have a safe one. You stay right there, folks. Dow Industrials were up 39. S&P's up 19. S&P's up 8, rather. NASDAQ up 19. We're going to be back with our man Chad Coco from TD Ameritrade Thinkorswim. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finish up 39, Nasdaq up 19, S&P's up 7.5. And as we do each and every Monday at 30 past the second hour, we have our man, Mr. Chad Coco. Chad does the best option show on the planet, folks. It's right here at TFNN every Tuesday. 12 to 1 Eastern Standard Time. You can get it right on your cell phone. And, of course, don't forget, folks, we do live programming from 8 o'clock in the morning to 6 o'clock in the evening every trading day. Chad is on tomorrow, 12 to 1, right on your cell phone, TFNN.MOBI. If you'd like to get Tiger TV, which you're going to be able to see the Thinkorswim platform, see his charts, as well as hear Chad, just go to TFNN.com on your phone. On the right-hand side at the top, you're going to see Tiger TV. You hit that, you're going to get the audio, video, all of the above. If you haven't test drove the TD Ameritrade Thinkorswim platform, come over to our website at TFNN. You're going to see the banner on the top or on the side. Hit that banner. You can bring up the platform. They'll put paper money into your account. I use it each and every trading day, whether you're doing options, futures, commodities, or currencies. It's on one platform. Chad Coco, what's going on?
How's it going?
It's going great, man. You having a good day out there?
Yeah, pretty good.
Well, you know, S&Ps. I mean, bottom line is that cash S&P on the 19th of September were 2019. 15th of October, 1820. And here we are at 2038. How do we look at the
all over the place, right?
Yeah.
So if you're noticing, though, this morning the VIX was up with the S&P up as well. So there was uncertainty in the market everywhere. Now it's that VIX came back down a little bit. S&P is going up, so who knows?
That's interesting. Okay, so, and that's important. That type of divergence, right, would be something that, of course, traders want to pick up on, because that is saying, well, it could be saying that people either putting hedges on or, in fact, just the market makers themselves want a little more juice in order to basically buy and or sell any of those options, right?
Yeah, exactly. And also, we're getting to the end of the earnings season that's been going on for the past couple of weeks.
Yes.
Then we have the retail numbers at the end of the week, so it's kind of nice to see that there's a bunch more retail numbers coming out this week and kind of give us an idea of what those numbers will look like at the end of the week.
That's going to be interesting, too, particularly because we know the gasoline price has gone down dramatically. That may or may not hit retail that quick, but I can tell you, just filling up my own gas tank, I'm saying to myself, man, I'm saving like almost $20 on one fill-up. It's
more money in your pocket, more money to put back into the economy.
It's big money. I know. I mean, it just really is, because it's like something that each and every one of us basically have to use. You have to get to work, right?
Exactly, yeah. I mean, in the big city here, we have public transit, but still the gas prices here roll into that as well. So
yeah. Now, when we're coming into the end of the year, are there any special strategies that folks should look at inside the option market that, could make sense to them?
You really need to have your bias. If you have a bias in your market,
yes,
which way it's going to go, then you kind of build your strategies around that, which, if you listen to the show, I obviously talk a lot about that.
Right.
Kind of along the same situation. So the last couple of weeks I've been doing a lot of earnings type plays and strategies around that.
Right.
Tomorrow I'm going to be talking about how to exit trades when they go against you. So if you have something that may be a loser, maybe a good show to watch.
That's a big one. That's a big one. So, and when you're saying that if you had a loser, are we talking about in the option trade that's losing, and you're going to try to basically massage it in the equities?
I'm going to go over both. So if you have a stock position that's going against you, maybe a way to hedge some of that risk off of that, maybe lower your cost basis on that. So if it does turn around, or how to know when if it's time to get out,
Yeah.
We're talking about all that.
And, folks, every Tuesday, 12 to 1 Eastern Standard Time, he has an outstanding show, and I do listen to the show, Chad, and it's really cool how you do put it together. It's amazing that what has happened, folks, is that the strategies, when you're listening, what you really want to try to do is clear your head and just get one strategy at a time. You don't need to get all the strategies, folks, okay? If you learn one at a time, you'll see the type of common sense that it actually makes, which is pretty cool. And it's particularly cool when folks are laying out, if they want portfolios out there and they want stocks that they want to be into, whether it's, 6 months, 7 months, a year. There's a huge differential there that they can protect themselves without having to basically sell it and pay taxes on it, right?
Yeah, definitely can. Yeah, a good way to take advantage of a lower capital investment in some positions. So if you think something's going to drop, but you don't want to get out of position because it'd be a short-term gain, buy some puts, sell some calls against it. There's other ways you can get into these positions without having to invest a huge amount of capital or get on a trade that you may not want to get out of.
Yeah, and there's no doubt. And, depending on what sector you're looking at, folks, okay, what you'll see that is pretty neat if you want to get into an equity and you think the equity could even go lower, well, you know what? If you're willing to own that equity at a certain price, you can always sell the put. And
definitely,
in that case, you're hoping to get put to, which is really bizarre, but it's pretty cool, folks, because you're going to take in the premium, number one, and if it doesn't get there, you hold the premium. If it gets there and you wanted to buy that stock at that price anyway, what has happened is that you are going to get it slightly less expensive because that money goes in your account.
You're getting it cheaper than if you would have put it on the day where you put that short put on top of getting the premium from that put. So it's a win-win situation there.
Yeah, it is. It's really cool, no doubt. Well, listen, man, you have a great night, safe night. Of course, we look forward to the show tomorrow.
Yeah, sounds good. I'll be there.
Thanks so much, man. So it's 12 to 1 Eastern Standard Time, folks, right here at TFNN. And as we just said, right on your cell phone, you can get it, tfnn.mobi for the audio, tfnn.com for the video. Our man, Mr. Dave White, this is going to get interesting, too, to find out how this whole thing shakes out with Alibaba. So Alibaba, folks, is an ABC structure in the way up. It took out the B point, took it out with volume. You're at the price point now, and it's extended. But what is also happening, which is going to be intriguing to see how it runs up into, it's quite a while before the lockup. Normally it's actually a year, but in this particular case, it's going to be on the 18th of March. So that's something that you are going to be want to watch. But the stock is trading nice. There's no doubt about it. It took out B point out, took it out with juice. The B point that we were talking about was 100.67 on the 28th. Your A point is down at the bottom there of 83. It took it out with 67 million shares versus 32. So now you get an extension, and the A to B, I believe it's $18. It was 82. Yeah, it was 82 to 100. You know, so if we look at that now, here, so this is another way of doing this. So watch this. This is really a trip, because if we do, let's see. So you do $18. 18 times 1.618 would get you $29. And what I'm doing here, so $29 plus 96. Okay, $29, 29 plus 96. Okay, so check this out, folks. This would be a 1.618 when it hits 125. And what happens with a 1.618 extension, this one could hit it easy, then you're going to get a reversal. So we'll see how this shakes out on this one. But at 125, I bet this could do a 1 to 2 structure in the way up. So we'll see how that works out. But what the point is that when you extend yourself that far, you get a change of trend. It doesn't have to be forever, but you do get a change of trend. So we'll see how that is going to shake out. Gold market out here today, no doubt, took a hammering. If we go take a look at the GLD, what we have with the GLD is that the GLD is backing down into its lows, 8.5 million. It's coming into a 13.5. That'll go tested tomorrow. When you get this close, bottom line, I expect you're going to see that test get made. Dollar index is extended, is losing juice, but refuses. What it did today is this. It got to lower price, rejected lower price, had lighter volume. So that does say the dollar index wants to go topside once again. Inside a few of these gold stocks, there's some heavy destruction. There's no doubt about that. If we go look at IAG, they came down to lows. And what you want to do, folks, is you want to actually go look at some of the weaker gold stocks if you're in that business and see how they are performing as they come back to retest the lows again. Because what you're going to see, or what you should be able to glean out of that, is this. And it's just a defensive type of thought process. What happens is that if you have a weak stock inside a weak sector, which gold is, and you go back and you're testing, and the weaker ones are basically holding, that's telling you quite a bit. That's telling you that, guess what? We're at a low right now. This thing wants to go higher. If you are buying coins, and if you can get your hands on platinum coins, folks, versus gold coins, do it. Because platinum right now is at 1197. That's at its lows, but if you're going to buy a coin, period, when you're talking about 1197 in contrast to 1150 for gold, platinum is a much better deal on a longer-term basis. The reason being it's harder to mine, it's more valuable, it's all of the above. Don't forget, folks, come over to our website at TFNN. Our man, Mr. Steve Rhodes, he just launched a 7-week trading program today. It's an outstanding value. It's 2 separate webinars, follow up each and every week. The whole course is only $395. Check it out on the front page of TFNN.com, folks. We're coming right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow finished up 39, NASDAQ up 19, S&P's up 8 after the closeout here. You had a few equities come out, folks, with their numbers. Rackspace, R-A-X. We take a look at Rackspace closed at $37.32. That is trading right now at $37.90. No big deal there. Let's see what they're having to say here. Rackspace authorizes buyback. Oh my God! This is, wait till you see this. I'll show you this how this is set up. It's pretty sick. So Rackspace authorizes buyback of $500 million over the next 2 years. Plans $200 million accelerated repurchase as the first initiative under the program. Their earnings per share was $18. Their estimate was $16. Their revenue was $460 million versus $458. They basically were growing on an installed base of 0.8%. When you take a look at Rackspace, we bring this out and we'll pull this back. We put this on a 10-year. What you're going to see is that Rackspace is down from a high of $81. We're at $37. You know, we'll see whether buying stock at these lower levels will do anything for them. At least they're not buying it at the highs. That's the other side to look at this particular point. Bottom line is that the amount of money that these companies have used and basically blew their brains out, particularly IBM, is pretty amazing. If we go over to Caesars, CZR, Caesars Entertainment, that is, CZR closed at $11.54. That is trading right now at $10.75. And what you're going to see with that is that that's going to go after its swing low out here of $8.51. That's a high volume swing low. We put this on a much longer term basis, and it looks like, you know, this is a company that it must have already went bankrupt and come back out again. That's what, okay. So let me just see this. Yeah, they basically came back out and went public again in 2007. Bottom line is that, they probably took them private and then went public again. That's what's going on. Well, what you're going to see out here is that this thing is going to, looks like it's going to make its way all the way back to the lows out here. That's where we're out, right? It has a high volume low of 851. That wants to get spiked, and we'll see if, in fact, it takes those levels out. What we are going to see out here, if we go over to ExxonMobil, so ExxonMobil is the largest weighting structure inside the XLE, Chevron second, and what you're going to see with ExxonMobil, couldn't handle higher price out today. Right at ICE, Exxon wants to go after this 90.61, and they're at 96. We'll see what kind of juice it has going down there. Chevron is the second largest weighting inside the XLE. That also couldn't hold higher price. That's saying that wants to get down to 109. We look at the Schlumberger SLB. What Schlumberger is doing out here, the counter-trend bounce in Schlumberger was really weak. Schlumberger had traded from a price point of 118 down to 86. You had a counter-trend bounce up to the 100 area, and it couldn't even hold 100. Now, that's anemic because a normal counter-trend bounce, right, should have been able to get Schlumberger somewhere up until the 102 to 104 level. The bottom line is that it's just not there. We pull this back a little bit longer basis, and what you're going to see is that it was a major failure to take out the 2007 highs. What does that set up? It doesn't set up a disaster on the way down, but you set up a 78 price point. 78 price point is pretty intense from the highs that were generated, because 118 to 78. As we talk about the net in general, if we go over to Amazon, it's coming up to its season right now. Amazon still can't get any traction. So what's going on with Amazon right now, folks, is this. Amazon is going on we're getting close to a year. The high in Amazon was generated in January of 2014. That was 25% higher. So it's a big number. You pulled off that level, and you pulled off with big volume. Amazon's important. Why? Because Amazon made its low almost 8 months before the market made its low in 2007. The real question is going to be, is Amazon going to make a leg down after these holiday sales come out? You know, it has a high volume. It has two separate high volume spikes. The first one is on April of this year at 288, and the second one was a test of that of 284, and the 284 of last month came in with even more volume. So what that sets up another test, and the way Amazon is, Amazon can get not only lower, but a dramatically amount lower. Hewlett-Packard, HPQ, you take a look at Hewlett-Packard, one of the targets, want to take a look at it. Hewlett-Packard is coming up to test the spike of the 6th which is 37.53. We've hit 36.90, 37.05. I'd let it test it before you go south on that, if that's what you're going to do, because that right now is still only a counter trend bounce. I do want to wish all those Marines out there a happy 239th birthday. November 10th, 1775 is the name of the game, folks. That's when the United States Marine Corps started. We do want to thank each and every one of you, Tigers and Tigresses, for growling and prowling with us out here. Of course, we're gonna leave you with that Marine Corps hymn. And tomorrow, folks, don't forget you get Veterans Day. All those veterans, the reason that we can hang around and basically do what we do is what? Is because they keep our freedom on a continual basis. And, you know, I was listening to 60 Minutes last night. Well, we'll let you go with this. Have a great one. Have a safe one, folks.